Hello everyone, welcome to today's US Open. I'm your host Nikos Zabouras. As you take a look at the risk warnings and the disclaimers, just to let you know that we will be talking about the Japanese yen today, following some recent verbal support for the currency by Japanese officials, and also central bank commentary is in the spotlight as the ECB annual forum is underway. But please read carefully through the risk warnings, and then we will get started. Once again, please read carefully through the risk warnings and disclaimers, and then we will get started. Okay, let's get the ball rolling. Let's bring your USD in our screens, but as I said, we will be talking about commentary by ECB officials and other central bank officials, of course, but support the pair. As you can see, it rises today, and then we will move over to USD JPY, given a series of verbal warnings against the weak yen by Japanese officials as the pair approaches the September 2022 intervention levels. And we will also talk about copper, the commodity, given recent central bank activity, for China central bank activity, which is a major consumer of copper. And then we will go to the tech-heavy index from the United States, the NASDAQ 100. So let's get started with Euro USD as always. The pair comes from a losing week as Chair Powell appeared more hawkish in his two-day Congress testimony, saying that 2 more hikes is a pretty good guess of what will happen, but once again did not fully commit to this outlook. The pair rises significantly today, as you can see on the chart, as there was another round of aggressive comments by ECB officials, some of which pointed to hikes past July. President Lagarde did not go that far, but still was hawkish, saying that they have to bring rates to sufficiently restrictive rates and keep them there for as long as necessary. This props Euro USD, which had defended the 200-period EMA during last week's decline, as we expected, and now returns above the daily Ichimoku cloud. Bulls stay in control and have the ability to push for new 2023 highs at 110.96, but further gains that would challenge 1.1233, we are more cautious around that. Despite the upbeat mood, there is still risk for sub EMA 200 moves, but strong catalyst would be required for the June lows to be threatened. This seems to be quite far at this stage. That's a 1.0634 level. Now let's head off to USD JPY, which has been in focus this week, as we already mentioned. It has risen nearly 10% year to date and closes in to the 145-146 region, where Japanese authorities had stepped in September of last year to prop the yen. This had come after continued verbal support in a 25% rally that year at that point, fueled by the policy divergence between the Bank of Japan and its US counterpart. The differential persists, moving on to now, and a couple of Japanese officials have already warned against the weak yen, creating risk for another intervention. As such, USD-JPY is contained this week. You can see that the recent rally sort of loses steam this week. So there is scope for volatility, one thing, and B, for a pullback. However, a test of the 200-period DMA at around 140 could need a strong catalyst, and in any case, the downside appears well protected with multiple support levels. Now, on the other side, even if officials do intervene again, the impact is likely going to be limited unless the BOJ begins to normalize or signals towards that to normalize its ultra loss stance, and that's a lesson we got from the previous intervention as well that we have already talked about. Bulls are in any case in control and have the ability to reach the pre-intervention high at 145.9, although 148.83, the next major resistance, is distant at this point. That's it from USD-JPY. Now let's switch gears and go to commodity copper, which we don't often cover through these US Open Live sessions, but we do on the respective FXCM, on the FXCM market analysis websites of the respective regions. Now we're going to take a look at it today, since it has broken a key support after the Chinese central bank's actions were concluded, and let's talk a little bit about that a little bit more. China is one of the biggest consumers of copper, and a series of let's call it bad economic releases had weighed, leading to a 2023 low in late March, this here that we highlight on the chart. Poor data continued to come in after that, of course, but there were then hopes of stimulus by Chinese authorities, which helped it rebound indeed. And the central bank ended up slashing a series of rates to support growth and provide liquidity. Now, after that concluded, however, the commodity copper dropped and now trades below a critical support level, below the 38.2% Fibonacci of the last leg up and the 200-period EMA. This exposes it to 3.706, although the 2023 lows at 3.543 have a higher degree of difficulty. The central bank actions and potential more measures on the fiscal side can help the commodity, while the RSI has moved close to oversold levels. As such, a rebound would be reasonable, although the upside is not particularly friendly. Strong catalyst would be needed for sustained recovery, and we struggle to see that past the beyond the descending trend line from the 2023 highs at around 4.06 region. And as the US markets open, let's move to the Nasdaq. Which runs its second straight losing week in the aftermath of the Fed's upgraded dot plot, which implies an additional 50 basis points worth of hikes, and Chair Powell's hawkish Congress testimony from last week. Now, there is scope for further pressure, and the test of the EMA 200 period and the 23% Fibonacci of the last stretch up from March at around 11,400. Sorry. Now, daily close below that level could spark a deeper correction towards the 38% Fibo and the daily Ichimoku, but in any case, the downside is well protected. And even though Chair Powell appeared more hawkish, he still did not commit to the rate outlook for the 2 more hikes. And the Nasdaq 100 is at a clear bull run, driven to a large part by the artificial intelligence boom, for which we have talked about again here, but also through our written content. So bulls are in control, and there are prospects for new record highs, but these are a little bit far yet at 16,771, and they may prove elusive in the near term, and a deeper pullback may be required. That's pretty much it for now, but let's talk a little bit more about what's ahead. As we said, we have the annual ECB following Sintra. Wednesday is the big day, as we expect panel discussions with the participation of the heads from the European Central Bank, the Fed, the Bank of England, and the Bank of Japan. Of course, the day begins with monthly inflation figures from Australia, but the quarterly ones are the most closely watched. And these are the monthly. So that's pretty much it for today. We have more important events towards the end of the week, but we'll talk about that at our next session on Thursday at our usual time, 10 minutes before Wall Street opens. That's it for today. Thank you for joining me.